It's about that time of day again, folks. Welcome back. It's newsletter time, boys and girls. Joseph James here. Wednesday evening, September 2nd, 2015, cranking our way through this holiday-shortened first week of this beautiful month of September. What a beautiful month around the world, the month of September. Hope you guys are having a great week so far. We're trying to make our money early this week because we got that non-farm payroll kind of quarter day Friday. Don't forget, Friday is going to be early in, early out. We're probably not going to get more than an hour and a half of good trading opportunities in the U.S. session on Friday morning. Labor Day weekend coming up, so we only have a few more drops of this summertime left over. Get it while it lasts. What a great day we had today. Incredible volatility continues. We're looking at incredible volume, volatility. Whatever's in the water out there this end of August, early September, we'll take it because it's given us some incredible trading opportunities. If you followed the plan last night, you had another wonderful day looking for early selling opportunities on crude, opportunities on the S&P, and range-bound opportunities on gold and the euro. But as you know, tomorrow's a new day. So before we jump into charts, I've got a strategy for you guys and gals tomorrow. A lot of ranges for tomorrow. Crude, S&P, gold, euro, a lot of trading ranges as we go into Thursday's session. Most likely going to be the last full day of the week for us tomorrow. So without any further delay, let's jump right in. Please remember to watch this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube page, there's a link in the description of the video that'll take you over to our trading blog. First of all, you can grab a free pass, upper left-hand corner. If you're not a member of School of Trade and you'd like to test drive our live trade room as a guest for a day or maybe 2 days, come out and grab a free pass, upper left-hand corner. Lower left-hand corner, we have a nightly newsletter mailing list, boys and girls. Now you never have to worry about missing another newsletter ever again. All I need is your name and your email address in the lower left-hand corner, and I'll send you an email every evening when this newsletter is ready. Right below the video, you can download all the charts that I'm using in tonight's video. You can download those, follow that link below the video. And then over on the right-hand side, you can take a free trial of our advanced membership here at schooloftrade.com. You can learn more about the different levels of membership, and you can read member reviews by following those links on the right-hand side. Also, we've got someone standing by 24/7, 365 to give you guys any assistance along the way that you may need. I think that takes care of all the housekeeping issues. Now you know the who, what, where, when, and why. Don't forget, ask for help if you need it. Let's jump right in here. Starting out here with the S&P 500. E-mini S&P on my anchor chart. Range bound, range bound, range bound here. Now, if you haven't been with us all week here, this S&P, just like crude oil, has been all over the place. We go back. We started off the week inside of a trading range. We started off the week inside of a trading range. Took off to the downside, big old bear spike in channel, had a couple great selling opportunities here before the end of the morning time, right? We focus on that morning session each morning in our live trade room. A couple beautiful selling opportunities, but then you'll notice here, now we're stuck inside of a new short-term range, and that's going to take us into tomorrow's trading session. Looking at this short-term range, let's read the notes at the top of the chart, and we'll put together a plan for tomorrow. E-mini S&P range-bound and bullish this evening after sellers failed to complete the rotation back to the lows of the range, which was followed by a strong break of the highs up to that midline of the bull channel. And our plan is to look for buying opportunities going back to the original range where we started the week. And as I'm recording this right now, just before 7 o'clock, you can see here, we are moving our way up towards that measured move target overhead. So let's take a look at this a little bit further zoomed out there. Perfect. Now, as you can see, we're rotating back and forth. Rotating up, back down, back up, and this is where the sellers ran into trouble. They couldn't finish the job rotating back to those lows. When the sellers failed to rotate back to the lows, we know these ranges, they're going to rotate, right? From low to high, high to low, low to high, and then back down to those lows. Didn't happen that way. Now we have the first test of the breakout. It looks very, very bullish here to me. I'll be very, very surprised here if this fails and comes back down. But ultimately, though, at this point, we are bullish above the high of this range at 38 and a quarter, and then bearish back below that 38.25. So assuming we get the opportunity here, we're looking for a chance here right now to buy this next pullback using the low of that major channel, because as you can see here, we have an A, B, C, D measured move waiting for us overhead. Now, that measured move is up at that 59.68, right? We'll call it 60 even, 1960. If we can get back above that 1960 area, now we're going to get sucked right back up into that trading range. So the way the ball will bounce for tomorrow, what we're looking for is buying opportunities as long as we are above that, again, 1938.25. So price, we're hoping that we'll get a shot here. Price will come down. I'd love to see the sellers try a few times to bring it in and fail and give me a chance to buy the pullback, right, to the high of that range, and then up to, of course, again, that 1960. Bottom line is, whether it goes straight up or it gives us a nice pullback to get in at a much better price, our target in the short term will be that 1960 area on the S&P. In fact, we'll be bullish here again as long as we stay above that 1938.25. On the pullback, if we happen to fail and tumble back in, now of course we know the sellers will have control back down to the lows of the range, and most likely, if these buyers are going to fail this close to being up into that next range, it's probably going to overcompensate and end up all the way back down at the end of that range. So as you can see, the real battle zone in this S&P chart is that 38.25 kind of line in the sand, which is the top of that trading range we've seen over the past 48 hours. Now, let's talk about as price goes higher, because what's going to happen is we're going to hit that measured move. It's definitely going to provide us with some resistance. You can see it's perfectly placed. I mean, you couldn't have scripted this any better. Measured move puts us conveniently back right to the lows of that prior range. That will act as resistance, as you can imagine, and that's where we need to now dig in for tomorrow. 1960 is where we're going to really roll up our sleeves and watch for tomorrow. Ultimately, what should happen is we should see, if the bulls are still in control, we should see the sellers try to run this lower and fail, and when they do, we'll be waiting for those sellers. You know, the markets like to try twice and then give up, right? We'll look for the sellers to try twice here, and after they fail, that'll be our clue now to buy this sucker right back up. And you've got targets waiting for you, the midline of the range, and then all the way back to where we came from the beginning of this week. Now, if we do see these sellers able to take this price lower, you know where we're hunting to, right? We're back down to that 13.25. And then we do it all over again. If they can't keep it above, right, we sell it right back down. So remember, rotation, right? The theme of this and the theme of the whole video tonight is going to be a lot of big trading ranges. We take the range expansions, we take the 50-50s of the ranges, and we watch closely to see how the markets react in and around these ranges. Right now, we're bullish up to that 1960, and then again, that's where we're really going to dig in here tomorrow. I personally would be looking for the sellers to fail and finish this move back up. If they don't, though, and they can't get that price going higher, it's going to rotate now back down towards the top of that range. We'll still be bullish at that point once we get down to that range high. But again, the minute it goes back below, look out below, it'll rotate all the way back down to that range low. Don't forget, we'll be trading this market together tomorrow morning, live in real time in our chat room. Let's take a look here at the crude here now. Boy, oh boy. I mean, talk about volatility this week. What was crazy about today was that today had a very big range for an inventory day. But it was completely overshadowed by the 10% up on Monday, 10% down on Tuesday, and absolute craziness. Well, the good part was we got that big sell off crude, right? We got that big sell we were talking about from last night's newsletter. That definitely helped us make our De Niro this afternoon, well, actually this morning, right, just before the inventory report came out. So we knew we were looking to sell it back down to those lows. We got that. Honestly, though, I was talking to John about this afternoon. We were looking back over our trades today. Talking about, I was very, very surprised, though, to see such a strong reaction wham, right back up. Well, it didn't catch me off guard because we're open-minded to everything. But usually after that inventory report comes out, usually we don't completely return back in the opposite direction. Usually the one side or the other kind of taps out, waves the white flag, and says, "Okay, we're done for today. We'll go back tomorrow." But they just weren't done. And the afternoon, you could just see what happened. Literally a parabolic move all the way back up. So we got the sell early in the day today. And then you can see the sellers tried to push below this range, below 44s there, and just they couldn't get it to stay outside that range. And, well, you know what's going to happen now, right? Rotation, right? We rotate from the lows, or from the highs, down to the lows, back up to the highs, and that's what's likely coming next here on our day tomorrow here on Crude, right? So we got that big weekly trading range we're watching right now. Buyers failed to keep it going higher, back to the lows. Sellers failed to keep it going lower, and back towards the highs we're going to go. Now, the only thing that concerns me about this old black gold is the fact that we're smack right in the middle of this range. And you know what mama says, don't fiddle with the middle. So we know we're going to get probably the sloppiest price action that we've seen this week in and around this area, especially after that crazy response today to the inventory report. Okay, here's the plan for tomorrow. Crude oil is range bound with a bullish bias as we rotate from high to low and now back up towards the highs at $49 a barrel. It's actually $48.89, right? It's actually $48.89. So here's what we're looking at for tomorrow. We have a bullish spike in channel. Hasn't that been the name of the game this week? It's been spike and channel up. It was spike and channel up. We talked about that, right? Failed back down. Spike and channel down. Right? Obviously, again, we got the sell back down. That's exactly what was expected. We go back down to those range lows, and like I said last night, it was really anybody's ball game once we wound up back at these lows again. And then now you can see we're rotating back to these highs. I didn't expect it, but I'm not the one that pulls the trigger on these markets. I'll follow what they want to do here. So we'll follow the crowd. We'll take a look at that bull spike and channel. And because you are now an expert on a spike and channel, if you didn't watch Monday's newsletter, right? You got to hone your skills there on spike and channels. What do we expect here on a spike and channel? We expect there to be some sellers that will come in, right, looking for bargains. We also expect that we'll need a lower price here to entice some more of those bulls. So we're looking at a big correction and then back higher for an A, B, C, D. Now, I don't know what tomorrow will bring, but I do know the higher probability trades right now will be to the long side until these buyers tap out, wave the white flag, and fail. And usually that comes after they try twice to do anything. You can see that measured move, though, definitely puts us back up near those highs. And a convenient 45.12, 45, we'll say, it's 44.99 a barrel, 45.12, that area right there. It also coincides with the drop dead period here for the bullish spike in channel, which is at 44.5. Below 44.5, now all of a sudden this market looks very, very heavy. It looks very bearish. Write that down, 44.5 for tomorrow. We expect this price to give us a nice correction off these highs. I'll be looking to buy it on the way up. And then, of course, we've got targets waiting for us overhead at 46.98, 47.65. You've got the trigger zone resistance overhead on the way up to that 48.89. We'll be looking for profit. All right, guys. Now, don't forget, we have a bullish bias right now, but there may be a failure tomorrow, right? Be ready for that. Where will we be expecting a failure to take hold here? It'll be below that 44.5. So below 44.5, then we expect price to retest that low. What's going to happen is we're going to have to see those sellers get the job done below the A point and then hold it below that 43.87. Okay, so a couple things here. As we go lower, we officially fail below 44.50. Target is down at 43.87. It's a very small target. We may not get enough room there to get anything out of it. But that's where we're going to have to, again, just the S&P, the glove's going to come off here, and we expect to see the sellers try, and here's where you want to really be patient, because if they can't get and keep that price below that 43.87, we're going right back up again, probably right to where we came from today. If not, it'll turn into what we call a rotational trend day, and we'll be looking for the sellers back to the downside. Guys, lot going on right in the middle of this range. You do not need to do this on your own tomorrow. That's why we have a live trade room. We'll be opening up at 8 a.m. tomorrow, and we'll trade it together. Shall we move on to from the black gold down to the gold, that funny yellow metal? Nothing more than a trading range here on gold. We continue to see these trading ranges this week. Gold is range bound. Sellers are currently rotating price back to the lows of the range, right? Remember, low to high, high to low, low to high, unless of course they fail, and then we'll expand out into a wider range. It appears they may have run into a little bit of problems here on the way down. So, with that said, I am expecting the buyers to try and move this price back up towards those range highs at 1146, but we're going to keep an eye open for this, right? And if they do fail, 1125.3 is where we're going to see. Now, here's my rationale behind it. As you can see here, we are rotating from the low up to the high, and we're expecting price to want to come back down towards these lows, right? So that's the idea behind it. Again, we're right in the middle of this range, so it's going to get a little bit slippery here in this middle, right? We know, as you can see with the volume profiling on the left-hand side, remember guys, I don't use volume for entries. I do find it to be very effective, though, at giving me an overall understanding of where the accepted values are for this market right now. So you can see we literally are stuck right in the middle. So if you're looking for the easy money trades right now, you definitely want to be doing it at the low or at the high. Let me repeat that. Because we're right in the middle of this, what appears to be completely balanced market right now, the smart money is going to be looking to buy those lows and sell those highs. Here's what we're going to be looking at in the short term. As you can see here, we have an AB, CD, measured move extension coming up right about 1130. That is likely going to be that obstacle that these sellers are going to have to get through. And judging on the fact that we are balanced right now, it just doesn't really give me a lot of confidence that they're going to be able to push this down. So, most likely, we have our sellers in control. They've tried once, they've tried twice. I'm expecting to see these buyers are going to try to run this thing back up towards those highs. What I'm looking for to sell is I'm looking for those buyers to try and fail, so that will give me the ammunition we need in the middle where it's going to be the sloppiest to bring it right back down to those lows. As of right now, if I sell short right now, I'm ultimately guessing right in the middle. There's not enough proof. All we know right now is these sellers are in their second attempt to push lower here, and it will probably end up right around the 1130 area. Then we'll give the buyers a shot. The buyers will take control, and they'll try to push this higher. Once, twice. If they fail, we go back down to those lows. If they're successful, we go back up to those highs. Once again, very challenging right in the middle of this range, so on our best behavior. If I'm going to sell right now, the easiest way to get short is to do it on the backs of the buyer failure. Do it right into the buyer failures. That means wait for those buyers. You may have to wait for it to finish the move down, and then wait for the buyers to try twice, and when they fail, that will give you the ammunition you need without having to sell right into this measured move. As you can see, very balanced right now on gold. One more time, the hard money is in the middle. The easy money is going to be once we get down to those lows, looking for that failure and buying it back up. Once we get up to these highs, look for that failure and sell it back down. That's the plan that's been working for us well all week here on the gold, and of course also now on the euro. Wrapping up here this newsletter this evening. Always a great time with you guys and gals. Hope you've had a great week with me so far. We go back to the euro. Now, I got to be honest, I was hoping that by the time I recorded this video, just shy of 7 o'clock Eastern Time, I was hoping that we would have filled that gap by now, as I talked about in last night's newsletter. If you remember, we talked about this in last night's newsletter. My exact words were this. We had a first try by, remember, we get this trading range we're dealing with this week here on the euro. And what's the rule with the trading range? The rule is fade every breakout. Sell the breakout to the upside, buy the breakout to the downside until what? Until we see the second attempt can keep it going. Well, what do you see here? The second attempt was a horrible example of that, right? A horrible example. So, here's a great example of the buyers trying twice and failing. I'm not going to sell that, right? I'm not going to sell into a bullish move. What I will do, though, is I'll say, all right, well, show me buyers that you can't get the job done. They once, they twice, and then we go back down in, right? So it's a very, very easy idea. We know that while the market's moving higher, if I'm suspicious, because again, the whole foundation of this is built around a trading range, I'm suspicious of these buyers. But for me to get the juice, I'm not just going to sell the first little red candle that we see, right? I want to wait and really see these buyers fail, because for all I know, they're just reloading the bullets. They're going to take this thing higher, right? I don't know enough yet. But once I know, they tried once, they tried twice, see you suckers, right back down into that range. And of course, we're using the top of the range as a target, the midline as a target. Again, I had the gap at 12.10 as the target. And then any guesses on where we're going next? Back down to the opposite side of the range. Now, what do you think we'll do from there? We'll try it again. The sellers will try again. They'll try to break out. I'll buy that first breakout. They'll try it again. If they keep it below, now we're bearish. It's that simple, guys. Don't forget, chat room opens up tomorrow morning. Trade room is up tomorrow morning at 8 a.m. Eastern Time. We are rotating now down towards those lows. What's the best plan now? Well, you've already missed the easy money. Right? If you're not in it yet, you've missed the easy money. Where's the easy money coming next? Buyer failure. Let's see those buyers try to take it one more time. Once, twice, back in, and we're selling short back into that range. Okay? That's the next opportunity. Okay? Don't touch this thing in the middle of this range. Okay? Promise me that. Not with your money. Grab somebody else's money. Okay? Don't do it with your account, though. Okay, don't even do it on the simulator. It's cancerous, right? It's infectious. It'll make you a bad trader. You get lazy out there. Treat the simulator like a real account. Now, if we go lower, again, fade the first try. Fade the second try. It's only when we keep going after that second try. Don't forget, guys, I teach all this stuff to our students here at School of Trade, and I hope you enjoyed the new format this week, getting a little more intimate here with our volume charts here at School of Trade's headquarters in Los Angeles. Guys, don't forget, we open up our trade room tomorrow morning at 8 a.m. Eastern Time. I'd love to show you guys around tomorrow morning. Come out and join me here. I got a free trial at schooloftrade.com. I can guarantee you're going to learn a lot more with me in 1 week on my free trial than you will anywhere else on the interwebs. I take a lot of pride in the fact that our free trial is basically what other educational websites charge thousands of dollars for. And then, of course, we have 3 levels of membership: beginner, intermediate, and advanced levels of membership. That way, if you're a brand new trader, I'll teach you all the ABCs as well as the fundamentals. If you're an experienced trader, but you're still trying to figure out that combination sequence, right, to crack open this lock, remember, guys, being a day trader is not about knowing about trading. It's like opening up a combination lock. You can't just know the numbers. You got to use the numbers in a certain sequence. And that's not just day trading. That's life in general. Don't forget, guys, I've got someone standing by 24/7, 365 to give you guys a hand every step of the way. My name is Joseph. We've been doing this longer than anybody else on the interwebs, and I want to prove it to you. Grab a copy of the free trial, call the office, let us know what you guys are doing in your trading career. And in the meantime, I'll see you tomorrow morning, 8 a.m. Eastern Time, open the Trader up, and then again tomorrow, the last day of the week here for this newsletter, 8 p.m. Eastern Time. I'm out of here for now, guys and gals. Have a good one. Be well out there. Be nice to each other. Adios, amigos. Bye-bye for now.